If rates keep rising, which names should investors avoid? When we looked at all the stocks in the S&P 500, 4 stocks stood out. These are the ones with the highest dividend yields and above average valuations. We're talking about Frontier Communications, Iron Mountain, Welltower, and Ventas. Welcome to Trading Nation. I'm Eric Chemi. Today we're joined by Larry McDonald from ACG Analytics and Boris Schlossberg from BK Asset Management. Larry, let's start with you. You see these 4 names, you think about the relationship between rates and stocks. What is your take here?
Right here, you want to be buying interest rate sensitive stocks, and I'll tell you why. We're at the top end of a very critical trading range in the 10-year. The entire street is short bonds. We've had 3 nasty headlines today. Probably one of the most famous investors of all time, David Tepper, was out with bearish comments on bonds. We had export data in China, and we had strong employment data. So that's a perfect storm to create a capitulation in bonds. You can buy interest rate sensitive stocks or bonds. TLT we like, utilities, or you can invest in interest rate sensitive stocks. Those will do well over the next month as this capitulation kind of wears away.
Boris, you heard what he said. He also mentioned Tepper's comment too, even things like TLT. When you put out all that together, what is your thesis here going forward?
Again, I think the momentum is swinging the other way. I'm with Tepper here on the idea that I think if rates are genuinely going up, this is no longer, once in a fake out dynamic that we've had so many times over the past 3 or 4 years. And if rates are genuinely going up, then dividend yielding stocks are going to be squeezed. They were in a massive bubble when there was no yield to be found. And now that there's going to be competition, I think you're going to see, especially, and this is a critical thing, especially if they can't maintain dividend growth going forward, I think they're going to see a lot of pairing of those positions as yields go up.
I'd just like to add there, thanks, Boris. There's a big problem in Washington. There's a disconnect between Wall Street's expectations and what Washington can deliver this year. Washington's going to fall down a little bit this spring, and I'm very confident in our bear traps report. We feel the 10-year bond, which is now approaching 260, will hit 225 before 3%. So we're going to go to 225 or below. We're going to have another rally. The bull market's not over yet. There's another rally left. And Boris may be right over the next year and a half, but we're going to rally before the big sell-off.
Maybe we're both right, Larry, in the short run, and I'm in the long run. We'll see.
Maybe you're both right. That would be an interesting way of having a win-win situation there. I'm just going to ask really quickly, does anyone have any thoughts on these 4 stocks or any of these 4 stocks in particular, or is that not something you guys are looking at right now?
No, not any of those particular stocks, although, as I said, the fact that they have high valuation, high dividend yield puts them in a danger zone for me, because they're going to have to really put up or shut up going forward if the yield curve expands higher.
Okay.
Yeah, I just don't have any intelligence on those names.
Okay, well, we'll just have to leave it there. Maybe you guys will get your win-win situation. My thanks, of course, to both Boris and Larry for joining us here on Trading Nation. I'm Eric Chemi. Thanks for watching. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.